Hello, everyone. Welcome to the market opening bell on Tuesday, September 2nd, your 10-minute guide to the stock market. Hong Kong stocks rose significantly, driven by Alibaba, with the Hang Seng Index opening 430 points higher and later peaking at a 560-point gain to 25,638. It closed up 539 points or 2.2% at 25,617. The X-share index rose 174 points or 1.9% to 9,121, and the Hang Seng Tech Index gained 124 points or 2.2% to 5,798. Total market turnover was 380.2 billion Hong Kong dollars. Southbound funds recorded a net inflow of 11.942 billion dollars into Hong Kong stocks. Among them, net buying included Alibaba, totaling 4.921 billion, Tencent 1.234 billion, BYD 809 million, Innovent Biologics 321 million, Hua Hong Semiconductor 137 million, and Meitu 118 million. Net selling included Xiaomi 1.035 billion, Popmart 912 million, Meituan 451 million, and Kuaishou 337 million. According to statistics, southbound funds have been net buying Alibaba for 7 consecutive days, totaling 10.896 billion Hong Kong dollars. Hua Hong Semiconductor for 5 consecutive days, totaling 1.085 billion dollars, and net selling Xiaomi for 7 consecutive days, totaling 4.996 billion. Technically, the Hang Seng Index has crossed above its 10-day and 20-day moving averages. However, as previously noted, fluctuations around these lines are not significant. The key levels to watch are a breakout above 25,700 or drop below 24,800. Until either is confirmed, the market remains in a range-bound state. China's August S&P manufacturing PMI exceeded expectations. The mainland's personal consumption loan subsidy policy took effect on September 1st, offering a 1% annualized interest subsidy for loans used for mobile phones, cars, and renovations, with banks implementing automatic deduction systems. Shanghai and Shenzhen markets continue to rise, with A-share indexes opening higher but narrowing gains in the morning before rebounding in the afternoon. The Shanghai Composite rose 17 points or 0.5%, marking 3 consecutive days of gains, closing at 3,875. The Shenzhen component rose 132 points or 1.05% to 12,728, and the Chinex index gained 66 points or 2.3% to 2,956. Total turnover for the two markets was 2.75 trillion yuan, down 48.4 billion yuan from the previous trading day. China's August official manufacturing PMI rose to 49.4, slightly below expectations, remaining in contraction for the 5th consecutive month. The non-manufacturing PMI rose to 50.3, slightly above expectations, and the composite PMI output index rose to 50.5. China's August S&P manufacturing PMI climbed to 50.5, surpassing market expectations of 49.8 and up from 49.5 the previous month, indicating manufacturing production resumed growth driven by rising new orders. The renminbi central parity rate against the US dollar was set at 7.1072, down 42 basis points from the previous day's 7.103. Hua Hong Semiconductor plans to acquire the remaining 97.5% stake in Shanghai Huali Microelectronics. Its A-shares rose as much as 6.3% but closed down 3.2%. SMIC is planning to acquire a 49% stake in semiconductor manufacturing North China, with its A-shares suspended and X-shares rising as much as 8.2%, closing up 4.9%. Both Hua Hong Semiconductor and Huali Microelectronics are part of the Hua Hong Group, facing intra-group competition issues. Huali Microelectronics operates Hua Hong's Fab 5, 55 to 28 nanometer, 12-inch wafer, and Fab 6, 28 and 14 nanometer, 12-inch wafer, overlapping with Hua Hong Semiconductor's process technologies. By acquiring approximately 97.5% of Huali Microelectronics, Hua Hong Semiconductor aims to resolve intra-group competition. Post-acquisition, it will further consolidate its leadership in mature processes, especially 55 and 28 nanometer, and specialized processes, example, power management and analog chips, and may reduce costs through economies of scale. SM North China, a controlled subsidiary of SMIC, operates a key 12-inch wafer fab focusing on mature processes. As SMIC's four newly built 12-inch wafer fabs are still in the capacity ramp-up and depreciation peak phase, SM North China is a significant profit contributor. SMIC plans to acquire the 49% minority stake in SM North China through an A-share issuance to enhance economies of scale, strengthen control over its subsidiary, and optimize financial structure and profit distribution. Hua Hong's acquisition focuses on resolving intra-group process overlap, while SMIC's acquisition aims to strengthen control over profit sources and scale expansion. BYD reported August NEV production of 353,090 vehicles, down 3.8% year-on-year, but up 11.1% month-on-month. Sales reached 373,626 vehicles, up 0.1% year-on-year and 8.5% month-on-month, with overseas sales of 80,813 vehicles, up 0.1% month-on-month. For the first 8 months, cumulative NEV sales totaled 2.8638 million vehicles, up 23% year-on-year. To meet the annual target of 5.5 million vehicles, BYD must average 659,000 vehicles per month for the remaining 4 months, a challenging goal. Geely Automobile reported August sales of 250,200 vehicles, up 38% year-on-year. For the first 8 months, total sales reached 1.8971 million vehicles, up 47% year-on-year, achieving a 64% of its 3 million vehicle annual target. To meet the full year goal, Geely needs to average 275,800 vehicles per month for the remaining 4 months. Seeker Technology reported August sales of 44,843 vehicles, up 11% year-on-year and 2% month-on-month, marking 6 consecutive months of over 40,000 vehicles sold. Of these, Seeker branch sold 17,626 vehicles, and Lynk & Co. sold 27,217 vehicles. Seeker 9X began pre-sales on August 29th at the Chengdu Auto Show, receiving 42,667 orders within the first hour. Lynk & Co. 10EMP also started pre-sales and will officially launch on September 8th. NIO delivered 31,305 vehicles in August, up 55.2% year-on-year, including 10,525 premium smart electric vehicles from the NIO brand, 16,434 family smart electric vehicles from the OnFo brand, and 4,346 premium compact smart electric vehicles from the Firefly brand. Li Auto delivered 28,529 vehicles in August, down 7.2% from July's 30,731. In September, Li Auto will launch its pure electric SUV, the Li i6, priced between 250,000 and 300,000 yuan, which may boost sales. Today, one new stock, Ox Electric, stock code 2580, will list. It closed up 116.7 Hong Kong dollars in yesterday's grey market, trading on Phillip Mart, down 4.1% or 0.72 Hong Kong dollars from the IPO price. Excluding fees, a 200-share lot would face a paper loss of 144 Hong Kong dollars. Our stock pick today is Simcere Pharmaceutical Group, stock code 2096. Simcere Pharmaceutical Group is an innovation and R&D driven pharmaceutical company focusing on neuroscience, oncology, autoimmune diseases, and anti-infectives, while proactively exploring disease areas with significant future clinical needs. Within its focus areas, the group has 10 innovative drugs approved for market sale. As of June 30, 2025, these drugs have been included in over 100 guidelines and consensus issued by authoritative professional societies, with more than 45 products listed in the National Reimbursement Drug List (NRDL). The group places great emphasis on building innovative drug R&D capabilities, with innovation centers established in Shanghai, Nanjing, Beijing, Boston, and Hong Kong. It has also set up the National Key Laboratory for Neuroscience and Oncology Drug R&D. Its R&D system covers the entire process from drug discovery, preclinical development, clinical trials, to registration, and includes leading platforms such as protein engineering, multi-antibody, TCE ADC, AI-assisted molecular generation, and protein degradation. The group's 6 drug production facilities, all compliant with China's GMP standards, have been put into operation, with some production lines passing EU GMP certification or US FDA inspections. The group boasts a nationwide marketing network and leading commercialization capabilities. It continues to strengthen its professional marketing expertise to enhance drug coverage and accessibility. Its 4 marketing divisions, neuroscience, oncology, autoimmune and comprehensive, and retail, along with other support departments, have personnel spread across 31 provinces, cities, and autonomous regions in China. Its product covered over 3,000 tertiary hospitals, approximately 17,000 other hospitals and medical institutions, and more than 200 large national or regional pharmacy chains. For the 6 months ended June 30, 2025, the group achieved revenue of 3.585 billion yuan, a 15.1% increase compared to the same period in 2024. Innovative drug business revenue reached 2.776 billion yuan, accounting for 77.4% of total revenue. Profit attributable to shareholders was 604 million yuan, up 32.2%. In the first half of the year, 2 new innovative drugs were approved for market launch, and 2 additional innovative drugs had their new drug applications (NDAs) accepted. As of June 30, 2025, the group's innovative drug pipeline included over 60 projects, with 6 candidates in ND pivotal clinical stages and 12 molecules in early clinical stages. The pipeline encompasses monoclonal antibodies, bispecific antibodies, multi-antibodies, fusion proteins, antibody drug conjugates (ADCs), and small molecule drugs, offering significant clinical and commercial potential to benefit more patients. Recommended buy price 13.8 Hong Kong dollars, target price $15.2, stop loss $13. I do not hold the aforementioned stock.